Welcome to Jazz After Dark, everybody. Happy holiday week to you. Hope you've got big Thanksgiving plans and everything. Just enjoying the last of a lighter old fashioned with Basil Hayden, actually. A little Basil Hayden rye in there. Well, we're going to talk about some things here tonight. As we do often on Jazz After Dark, our focus is on going a little bit deeper when we can and trying to explain kind of the underlying effects of things that are happening or an added lesson there. And one of the things that's important to me as a fund manager, we manage over $300 million now, and thankful for that. But one of the important things for me is to realize when things are skewed or when the breadth is low. And that's just a fancy way of saying the breadth of the market. So if we look at the S&P 500, the breadth would be the whole thing. Like if everything is participating on the way up, there's high breadth in the market, right? If only a couple things are moving the market higher, that's very narrow, meaning it's sort of a cautious type rally. We want to be a little bit worried. Well, we've seen that a lot this year, and you guys know now, I'm not telling you anything new, but the top 7 stocks have accounted for most of the gains. So that's a very narrow year-to-date breadth, meaning not much has participated. And we want to know when that happens. I don't know if it's a good thing or bad thing, but one of the things now that I'm curious about is, hey, what happens in a year where there's just a few stocks that lead the market higher? Does that tend to continue in the next year, or do those stocks take a little bit of a break? So we're going to get into some geekiness here with you. All right. So as I mentioned here just a second ago, oops, sorry about that. The top 7 stocks are, to start with this, they are now the bulk of the weighting of the S&P, or I should say they have their biggest weighting. So if you look at the chart up here, what I did is I took the top 7 stocks every single year by weight, not by performance. And I said, well, what was their weighting? And then just compared it to history here. So we currently stand without Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. What used to be Facebook is now Meta. We said, well, if we add those up together, they account for a record high 29%. I went back. I usually use my birthday as a time that I go back. I went, there was a recession in there, so I went a little bit further. But I said, well, is that a lot? 29% for 7 stocks? And in fact, it is a new record. So those 7 stocks, to be fair, like if you want to look at those 7 this year, they're a lot different than just a couple years ago and a couple years before that, and so on and so on. So it's not that I'm using these 7 stocks every single year. I'm saying that whatever the top 7 stocks were. So United Healthcare, Johnson & Johnson, and Berkshire Hathaway were actually kicked out of the top 7 thanks to Tesla and Meta and Nvidia, right? Kind of cool. Tech sort of taking over there from everybody else. And that's probably fine, right? Because tech is kind of what we do these days. So 29%. All right, well, that's high. We know that's a record there. If we take a look at how much those have contributed to the performance of the S&P, we've got, as those 7 collectively, 71% gains year to date. In other words, if you'd have had an equally weighted portfolio of just those 7 names and you somehow knew the future, you'd have a 71% year to date gain. The S&P over here has at this point, has a 19% year to date gain. The other 493 companies account for only a 6% gain. So you got these 7 stocks, you got 71%. If you only had the other 493, which is highly probable that you would have picked those or whatever, then you would have only a 6% gain. If you bought the index, of course, then it's 19%. That's all we're trying to show here. So what I was curious about was, okay, does that performance tend to go into the next year? There's a lot of questions about next year. Recession, and will these interest rates slow growth down? Will we experience what is traditionally called a recession or not? And so we're going to take a little bit of a deeper look here, because I found out that it is, on average, it is not normal for those top 7 stocks to lead the way one year, meaning account for essentially 76 or 3/4% of the year-to-date gains, and then do the same or something similar the next year. So if we take a look over here, I just bounce back over. Stay with me. This is a little bit geeky, but I'll explain all the little intricacies here. So what we did is we said the existing performance, I had to call it something, so we call it the trailing performance, right? Meaning, what did it do one year? And then on the y-axis, we said, well, what did it do the next year? And then we just did a simple scatter plot. If you're a math person, you know what I'm talking about. So here's what we found out. For example, right here, we have 1999 and the year 2000. In 1999, the top 7 stocks accounted for 27%. Sorry, that shouldn't be a percent sign there. In 1999, the 27% gain for the top 7 stocks. The rest of the, and the next year, those top 7 stocks lost 31%. So that's what we're plotting here on the chart. So on the x-axis, we say, oh, we got a 27% return. However, in the year following, we had a 31% decline. And so I just plopped all these on a chart real quick, tried not to make it too crazy. We looked at some of the more current years here leading up to COVID, some of the outliers. These would be all of the outliers in this case, and everything else represents, well, weakness. On average, we find out, and that's your R squared line there. On average, we find that the trend, as best as we can say it here, happens to be that the performance doesn't continue there, okay? So it would not be normal for next year, those top 7 stocks or whatever they happen to be in that year, let's say somebody else comes up from out of nowhere, it would not be normal for them to help boost the market in the same way. Okay. Now, I'll add to that by saying, take a look at where they've come from. For God's sakes, right? Look at some of these stocks. Here's their year-to-date gains on some of these stocks, right? So NVIDIA killing it. 237% in not even a full year yet, okay? You've got 178% sitting here with Meta, what used to be Facebook there, and not as impressive, but still very respectable gains for the rest of the 7, right? So look at where they've come from. Look at the moves that these have had over the course of just this year, which is almost over, right? And so, well, maybe use our research site and go, well, what happens afterwards, right? What happens if Apple has such a strong year, 50% gains there? Does it tend to continue the momentum? And if so, what does it look like in the short term? Does it get a little choppy? Is there a buying opportunity in there? Do we find out that after having such a strong year, it tends to get a little wild, but then continue with its momentum? I don't know. I'm just throwing ideas out there. And so the point that I wanted to make was, yes, there are a significant amount of gains. Literally 76% of all 19% year-to-date gains that we've seen have come from those 7 stocks. That's kind of concerning. I think, just to be absolutely fair here, I think that's kind of concerning because I always use the example of your friends going out fishing and you're out by the lake and there's 7 of you doing a bunch of fishing, okay? And you're the best fisherman that there are. What happens if even one of you quits? Just 7. I'm not saying 500 of you go fishing. I'm saying of 7 of you, one of you quits and says, I'm going to go sit by the shoreline, drink some beer. I don't feel like fishing. It's probably not a problem. You know what I mean? What happens if 2 of you quit or just get a little tired and you don't fish at the same pace that you used to? You're in big trouble, right? And so I worry that there's only 7 stocks doing this. However, is it a really big deal? We'll find out, because remember, every year there can be a new leading 7 stocks there. The rest of them have a lot of catching up to do, right? Because the S&P is weighted by market cap. So you'd have to see, Ross Stores. You'd have to see them just become like the size of an Apple or even like a Meta or something like that. I don't know. Hey, O'Reilly, Advanced Auto Parts, you guys selling a lot of wipers over there. You know what I mean? So it's a long shot for the majority of them, but there can be changes. Anyways, just thought that'd be fun to share with you. I hope you enjoy the rest of your evening there and the rest of your week. A special happy Thanksgiving to those of you out there that have been watching, supporting, and or possibly clients of Jazz Wealth. We appreciate it. Hope everything goes well and you enjoy wonderful political debates during your Thanksgiving dinner. You know what's going to happen, right? You know, there's always a Democrat, there's always a Republican, and then the kid that's like, I'm libertarian, right? Just kidding. Have fun with it.